Maraming takot mag-invest in real estate. What's the worst thing that could happen? Baka naman, it's not as bad as you think. And more importantly, how can you prevent the worst case scenario from happening? In this video, I'll talk about just that, so you can have the courage to start your real estate investment today. I'm Edric Magwan, and this is The Real Deal. Every type of investment has their own worst case scenario. Stocks could rapidly fall in the blink of an eye due to a single news article, while crypto could struggle with government acceptance and have serious roadblocks. Many could also vanish in the blink of an eye. Bonds, while generally viewed as secure, have had dwindling rewards due to low interest rates. For real estate investing, it has its own worst case scenario, especially if you're buying one on an installment basis or through bank financing. But the good news is, there are many ways to protect yourself from this worst case scenario, so you never have to worry about them. How? Before we answer this, sagutin muna natin, ano nga ba ang worst case scenario? When you're experiencing major financial distress and you fail to pay your monthly payments, you could lose your property. And the overall financial impact on you varies, depending on the status and how long you have been paying for the property. First, let's talk about when the property is still in the pre-selling stage. The law gives buyers of residential pre-selling properties some protections under the Maceda law, which we will break down into two. One, if you've been paying less than 2 years of installments, and two, if you've been paying more than 2 years of installments. Pag 2 years pa lang or less ang nabayaran mong installments under the Maceda law, you are given a grace period of not less than 60 days from the due date of the installment to pay the outstanding amounts and prevent cancellation of the contract. Pag more than 2 years ka na nagbabayad ng installments, your grace period is 1 month for every 1 year of installment payments made. For example, 3 years ka na nagbabayad. Your grace period would be 3 months. Since you have already made more payments, you are given additional protection. In case the buyer fails to pay within the grace period, the developer may cancel the sale. In case you've been paying installments for more than 2 years and up to 5 years, the developer shall refund the buyer an amount equivalent to 50% of all total payments made. So for example, over the past 4 years, you have paid a total of 1 million, but find yourself in a really bad financial situation and are no longer able to pay. If that happens, you still get 500,000 pesos. After 5 years of paying installments, you get an additional 5% refund for every additional year. On the other hand, for properties under mortgage or bank financing, the worst case scenario is the F word, foreclosure. When your property is foreclosed, the bank will sell the property. If the proceeds from the sale by the bank are more than the amount you owe, then you get the excess amount. But if the proceeds of the sale are not enough to cover the loan, you still have to pay them the balance. But remember that there are a lot of ways you can protect yourself from the worst case scenario through corrective and preventive measures. First, let's talk about the corrective measure. Let's say talagang nagawa mo na lahat, pero you really can't turn around a bad financial situation in the foreseeable future. What can you do? Tip number 1. Sell your property at break-even price, if not for a profit. Many don't realize that you can sell your property even when it is still pre-selling or under mortgage. Ito yung tinatawag nating PASALO or assume balance, either to the developer or to the bank. The moment you realize that you can't continue the payment after exhausting all possible solutions, put your property for sale. This way, you give yourself enough time to look for a buyer and you won't be pressured to sell your property at a loss. In fact, you may even get a profit from the sale or at least break even. This is definitely way better than letting go of your property under Maceda law or via foreclosure. But again, our goal is to prevent selling our property that is not on our own terms, or worse, just totally letting go of it. So how can we further avoid this? In fact, there are a lot of preventive measures that are within your 100% control. When you carefully plan for your real estate investment, you should never find yourself worrying about the worst case scenarios. But before we move on to the preventive measures, if you find this content helpful, hit the like button. Tip number 2. Build and maintain an emergency fund before investing. I know I've been mentioning this many times in my vlogs, but this is really the first step you have to do when investing in real estate. Your emergency fund should give you enough time to adjust and get back to your normal financial situation. Kapag may emergency fund ka, you won't be pressured to let go of your property or sell it not on your own terms in case of any unforeseen circumstances. As a rule of thumb, set aside at least 3 to 6 months of your income as an emergency fund. As a bonus tip, make your emergency fund readily available, meaning you can access it without any cost, but don't make it easy to get to. This may mean creating a separate account which you don't connect to your mobile app, so you don't get tempted to get funds from it. Perhaps you could even keep it in a separate bank that you don't frequent. Tip number 3. Never buy a property you can't afford to pay for long term. These days, ang daming low down payment promo terms. It is definitely a good opportunity to take advantage of. But remember, if you pay a lower down payment, you will have a bigger loan amount, which in turn may have a higher monthly amortization than your monthly down payment during the pre-selling stage. But as long as you have planned for it and you can follow through, then it should not be a problem. To know more about this, check out my other video. The bottom line here is, don't be too aggressive that you will buy a property now that you're unsure of if you can pay for it later on. But at the same time, don't be too conservative that you end up not investing at all or you'll settle for less. The key here is planning and cash flow management, which brings me to the next tip. Tip number 4. Keep a budget and track your spending. John Maxwell, an American author and speaker, once said, "A budget is telling your money where to go instead of wondering where it went." With a budget, you know where your money is going and you don't spend above your means. The good thing is, there are countless apps that you can use for free to track your spending easily. You can immediately see how you can cut down your spending and ultimately eliminate bad debts, such as credit card debts. You should never use your monthly payments for your property on something else. Dapat every month nakaset aside na yan. As a bonus tip, you may also want to create a separate bank account for your monthly down payment or loan amortization. The idea of this is you can easily transfer amounts here. Make the transfer automatic every month if your bank allows for this option. And make sure you make this particular account difficult to withdraw funds from. This way, nakaset aside na talaga ang monthly payments mo. Tip number 5. Always invest in good locations and developments. Not all properties are created equal. When you invest in a property, kailangan may malaking potential siya for capital appreciation. Kailangan may strong demand for it. Remember, cheaper doesn't mean better. There are some properties that are really cheap, but you may find na wala masyadong capital appreciation even after several years. Hirap din iparent. Or hindi maganda ang development and poor ang property maintenance. Dahil dito, baka pag kailangan mo nang magbenta, hindi mo mabenta at a profit. Instead, invest in locations with strong fundamentals. What do I mean by this? These are locations with several ongoing and planned infrastructure, office, and commercial developments. With this, you can foresee an increase in demand for years to come, and consequently, boost the value of the property long term. In addition, choose a development from trusted developers and with a good property management team, so you can be assured na maganda talaga ang quality and living experience. If you want to know which properties have high growth potential, schedule a free consultation with me or message me via the link in the description. When you invest in properties with strong fundamentals, you always win. The more years you hold on to the property, the bigger your capital appreciation, and the smaller chance you will sell it at a loss, even if you are facing a very bad financial situation. So even before you get started on your real estate investment, always plan to hold it long term. Selling your property not on your own terms should always be the last resort. Sometimes we are put into uncomfortable situations, but by following the tips I mentioned, could be the difference between losing the property and selling it at a huge profit. Thank you for watching. If you want to inquire about the pre-selling developments that I offer, you may get sample computations or sign up for a free consultation by visiting my website or by messaging me on my social media. I'm an accredited broker of the country's most trusted developers. And if you want to learn more about real estate investing, please subscribe to my channel and check out my other video. Let's get rich and financially free one property at a time.